Good afternoon, sorry. Good afternoon, everybody. I hope you're having a good afternoon. So today is 12th of November, and our webinar for the day is false breakouts. So basically from this webinar we're going to learn how to identify false breakouts. First of all, we must explain how to identify real genuine breakouts, and then how to identify also the false one. So the first thing that we're going to look at now, we want to define what a breakout is, so that you're able to understand when a false breakout is happening and when a genuine. Look at this chart, the chart where I am now. Assuming you have a level like this, you have maybe this is a very good horizontal level. The price gets below that level from the left side. The price gets up to this point here, but does not break above it. Instead, the price bounces off to the lower side. The next thing happens the same way. The price goes up to this point, bounces to the lower side, and then the same thing happens here, and then it bounces to the lower side. So while this is happening, these are reversal points. This becomes a reversal point, the first reversal point. The next reversal point, a good sell place, and the next reversal point is a next good sell place. So when the price comes up, now the fourth time, the price comes to this level, and instead of price bouncing off to the lower side, it actually breaks beyond it. Assuming this is one candle which has opened below and is now above this level, that the price has gone above this level, this is now a breakout. When the price opens below a level and closes above that level, like in this case, the candle which is opening below and closing above is known as the breakout candle. So what it simply means is the price may likely continue upwards, or the price may return back to the lower side. But what this means is this: if this happens, if the price opens here and closes above, you need to not to enter trade immediately. Do not enter trade immediately. Sometimes the price may do like this, may come back again below, then come back to the same level before eventually going to the lower side. So this move here, this is what is known as the false breakout. When the price breaks a level but it fails to sustain that breakout, this is called the false breakout. So the best time to trade something like this is not when the price has gone back below immediately, but wait for price to go below, come back to the same place, then get sustained. That is, the price must not be able to close above the second time it now comes again up. So this one is what we known as the false breakout. Sometimes it may be just one big tail, sometimes it may be real candles going above a level, then the same candles closing below. This is what, if you see anything like this, this becomes the false breakout. What false breakout means is the price attempts to go above a level but does not clearly ascend and close beyond it. So let's look at a case where how bearish how candles can be a sell, bearish false breakout. So you must have a level. First of all, before you say this is a bearish false breakout, you must have a level. Just a second. So we do have a level here. You can see the price comes down to this level, and then it goes up, bounces off from this point, then it goes to the same place, bounces off to the upper side, it goes down, bounces off from that point to the upper side. Then when the fourth time now the price comes back to this level, it goes and even closes below. So the fact that the price opened here and closed below is a very good indication that the price may likely continue to the lower side. So this in itself is known as a breakout. What makes it false is when the price pulls back up and ends up closing above the same place. So the entire move which we had below this level becomes the false breakout. And as I mentioned with the bullish breakout, the best time to trade this is not is not when the price has gone up, but when the price now comes back to the same place. This is the correct place to look for a buy from when it is touching the support at this time. Does this make sense? Whatever I'm saying, does it make sense to you that this is how we look at this, how we trade false breakout? We don't enter a trade while the price is below the red line. We wait for price to again pull back again above it. Even then we still don't enter any trades. We wait for price to get back again to the same red line, then we can pick a buy from that point. Is this okay? Does this make sense for you? So the next thing, the next thing now, we want to look at the actual breakout. So the actual breakout is a bit opposite what we just looked at. When you look at the actual breakout, this is where the price breaks below a level. Like in this case, the price opened here, it has gone down up to below 1.14482. It has gone below this level, and then instead of returning back and closing above, instead of price returning back and closing above, it actually goes only up to this point, then begins to consolidate. That is, it touches this level maybe 3 to 4 times, and then it continues massively to the lower side. So this breakout, the fact that the price opened here, the price opened above and closed below, this is a very, very good sign that we are broken below. So when this happens, when you see a very good level, the price used it in the past, it was being used, then the price opens above it and closes below. When the price again gets back to the same place, this should be a sell. This should be a sell. So the exact same place we were buying from previously becomes the same place where we are now looking for a sell from. This now the genuine breakout. Does this make sense? This is now a genuine breakout. This is a what genuine breakout means: the price breaks below a level, then continues to remain below that level in that direction. The other time the price may break above the same level, continue above, and even higher. That's a genuine breakout. So let's look at the real chart. We want to look at, on the real chart, we want to see examples of false breakouts. Let's see if you can get any. Okay, so assuming you have a level like this, look at this level here. Sorry, look at this, is a very good resistance. We have a resistance level here, we have another one here. So we have just a resistance, we have a resistance. Look at the way the price has gone above, as if it's breaking above, then it has gone and remained, then broken below, it has continued down before coming back to the same place. So technically, if you are monitoring this level, this could have been the correct place to look for a sell from, this one, because already we had a level, the price has attempted to go beyond it, then it has again come back and close below. Now we have a sell. Is that clear? Does this make sense? So we are not going to do anything unless the price comes back to the same place. If the price gets back to this point, then this is the correct place where we want to look for a sell from, because we have a false breakout above the same level. The other example, this is another one. We have a resistance level at this point here, and then you have another one here. So this is technically just a resistance. We have a resistance, we have a resistance, there's a break above, there's a break below, and then there's a return back to the same place. So the move which we had above this level, this is the false breakout. When this happens, when the price breaks above a level and then again gets back below the same level, this becomes the correct place to look for a sell from. This becomes a very good place where we want to look for a sell from, because there's a false breakout, the price has again come back to the same place. The next chart, let's see, we have another one here. This is a genuine breakout. It's like the price successfully went below this level and then has remained below it. Let's see. So sometimes it may appear that the price is forming a false breakout, but then it again ends up moving in that direction. So you can't, there's some cases where you may lose. That is, the price may appear to be giving us a false breakout, yet it's not a false breakout, it's just a genuine breakout. We have a level like this. So if you look at it from this point, we have some resistance here, we have some resistance at this point, we have a resistance, we have some resistance, and then there's this massive breakout. The price came back down, so this move becomes the false breakout. This is another false breakout. Then we look for a sell here. So technically, if you are looking at this chart, you could have taken a sell on the first retracement, which was here. You could have taken a sell there. If you didn't sell it, wait for price to get back down. If it gets back again, then you sell it. Does this make sense? So we look at the next chart, the next example. We have a resistance level here. So far with this resistance level, there is like we don't have any breakout except at this point here. The price came back. So I was looking at it like this. I wanted for price to false break within this level. So some people may take this as the false breakout. The candle you're seeing here, this tail as the false breakout. This is still a good definition. This one as a false breakout. To me, I look at it like real candles. I have to see real candles opening below, closing above, then the same real candles opening above and closing below. That's when it becomes a good false breakout for me. So we have another example. This is just a resistance. We have it here. So like in this case, we have a resistance, then there's this candle which opened here and closed above. This is the false breakout, this is the false breakout, and then we have a sell. So these are the correct places to look for a sell from. Okay, we have another one here. You may be wondering if this was actually an actual breakout, because it was a resistance. It was a resistance. The price opened here, closed above. It somehow continued up, but then the entire zone now, this one, is the false breakout. So if the price came back up to that point, then this was the correct place where you could have taken a sell from. The entire move, it looks weird. It looks really wide and big. But as long as the price has not sustained that move to the upper side, this becomes a false breakout. The entire move, all these consolidations, was actually a false breakout. So when the price came back, this was the correct place to look for a sell from. Does this make sense, whatever I'm saying? So thank you very much. That should bring us to the end of today's session. I will meet again next week at the same. So thank you. See you.